That's it. There may not be any more rate cuts. Well, according to Michelle Bullock, she says it's possible there are no more rate cuts. After the RBA unanimously voted to keep the cash rate on hold, the RBA governor has said it's possible there will be no more cash rate cuts at all, acknowledging the next move may be a hike. Well, let's dive into this because inflation has come in hotter than expected and a lot of people are freaking the F out. All right, so inflation came in hotter than they expected, and that has sent the entire economy into a meltdown or melt up, depending how you want to look at it. And essentially it was all off the back of one major factor, which is really interesting because it was sort of like, how did we not see this coming? So the big factor that caused inflation to really move higher was goods. So energy was the big one. Now, when it comes to energy, we had the government come in with a subsidy, which meant that, people weren't paying as much from their pockets for energy around the house, electricity and whatnot. And that just so happened to end previous to the last month. So of course the numbers are going to be higher because now everyone's paying more because there's no subsidy. So of course it's going to be higher. So now that we know that we've got inflation higher, there's no more rate cuts, most likely not going to have one this year. It's also important to note that unemployment is trending higher. Now, why is this important? Because the RBA is actually looking at two things. One is unemployment and two is inflation. Now, inflation might be ticking a little bit higher, but you can't just base that on one reading. You need to see the trend. So of course, nothing goes in a straight line down and nothing goes up in a straight line either. So when we had inflation increasing during the lockdown period, we saw inflation go up, but as it went up in staircases. So it was like, 2 months it was going up and then 1 month down, 2 months go up, but the overall trend was up. Now we're seeing the exact opposite play out now, which is, it's mainly going down, it pumps up and then it goes down again. So you can't just say, based on this one reading, that means there's no more rate cuts. It doesn't work like that. The other part to this is unemployment, and unemployment is definitely going up. So if unemployment increases and it continues to increase, then you better believe the RBA will start cutting rates, and that is going to be a very interesting situation because we have unemployment up and inflation up. Rates go down. I want to know what your thoughts are.